Hello, everyone. This is Neville Smith with I Dream of Florida Homes. So in today's video, we're going to go through the steps of how to make that dream a reality. And the most important part of this, especially for those of us who have to finance a property, is getting financing. So my first guest is going to be Vikki Rogers of Geneva Financial to help us navigate how to get from dream to reality. Vikki, can you tell us a little bit about yourself? How long have you been in the business?
Um, so hi, Neville, and thanks a bunch for having me help you out with this process. I've been doing this for over 20 years. I started in the late 90s. Oh, actually, I'm sorry, I started in the early 90s. I actually have a broad background in operations of mortgages. So I've worked in processing and underwriting. And now I've been originating loans for a number of years. So um, it's a it's a great, it's a great field. It's a super good feeling to help people, find their dream homes, and getting the money for it can be challenging, but, we try to make it, as painless as possible, and help you achieve that dream.
Okay. And as I alluded to earlier in when I first started, this is just one step of the process of purchasing a home. A lot of people, they wake up, they say, look, I want to buy a house. And, they go, okay, so how do I do that? It's not like just going into the store and picking up a jug of milk and walking out. So within our chats, because I'm thinking that we're going to have multiple times to talk about, all the different little wrinkles. Today is just an introduction to you and to these folks also of what the process is. So the lender comes in the process because that's the person that's holding the money, really. And it's not that they want to hold it; they want to lend money to someone that's going to give it back to them. Because that's the idea, is that you want to borrow some money so that you can buy something and use it. And the home is what you're going to do for foreseeable future. It could be 7 years, it could be 30 years, 15 years, it really doesn't matter. It's just that you want to do that right now. So Vikki, you tend to ask for, at least us realtors, one of the first things that we tend to ask people for is, are they pre-approved or do they have at least a pre-qualification? Can you tell me what the differences between those two things are?
Absolutely. It's really a big, big, big difference. Typically a pre-qualification, we don't actually issue pre-qualifications. I think if
Awesome.
we just ask somebody, how much money do you make? How much money do you have in the bank? What do you think your credit score is? We can kind of figure out, from just a few questions what they might be able to make in a payment. But we don't even do that nowadays, because when a seller is selling a home, they want to know that the person that's making an offer is truly going to be approved for a loan. They don't want to waste their time tying up that property under contract. And the person buying it, it's a stressful process to buy a home. So you really want to know from, the beginning, am I really going to be am I going to be approved? So when we do a pre-approval, we are going to ask to pull your credit. A lot of people say, oh, I don't want to have my credit pulled, my score is going to drop. Well, we understand that, but when we pull your credit, it's not like your score is going to drop 20 points. It doesn't have the same effect as being late on your Kohl's or your Visa charge card. It may drop a few points, but we have to have your credit report, because we need to know two things. We need to know your credit score, and we also need to know what your monthly liabilities are on your credit report, because we don't necessarily care about your cell phone bill or, how much you pay at daycare, unless you're a veteran, of course. But we do need to know what you're paying for your auto loan, your student loans, your credit cards. So we need to pull your credit. And then we're also going to ask you information about where you've been employed for the last 2 years, where you lived for the last 2 years, and where you intend to get the money from for the down payment, and for the closing cost on the loan. So what we do is we ask you that information. We ask you to back it up with some pay stubs, some W-2s, some bank statements, And we
Exactly.
actually take that information, run it through automated underwriting system, which is great because an automated underwriting system actually tells us if this information is verifiable and correct, then Fannie Mae or Freddie Mac or FHA, VA will insure or purchase, the investors will purchase your loans in the secondary market. We know that this loan will be approved if this information is true and in fact, is fact in the application. So that way we can give a pre-approval to you when you're going to purchase a home, and we can be confident that you're going to be able to get approved as long as we have all that information. So a pre-approval is very solid, and it can be done in as short as a day. If you just, have a normal job where you get a pay stub and you get a W-2. If you're self-employed, it can take a couple of days or depending on how fast you can get us all of your tax returns,
Awesome.
because it's a little more involved when you're self-employed. But a pre-approval doesn't usually take very long, and it goes a long way in trying to purchase a home.
Awesome. Does it cost anything?
For us, it does not. We don't charge for pre-approvals. You do, when you close the loan, we do charge you the credit report fees that we incurred when we did pull your credit. But if you don't close, you don't owe us that money. And we don't charge an application fee or anything for doing a pre-approval.
Awesome. A lot of times I've come across buyers who their mindset is, look, I'll find a house first and then I'll get pre-approved. And I try to explain it to them in the light that when you go to the store, I keep going to the store. You don't go in and then try to figure out if you brought your purse with you or if you have your credit card or whatever. You go in knowing that you have either your card in hand or you have money in hand so that you can make the purchase. So it's definitely important to do the pre-approval process. And I'm glad to see that you're doing the pre-approval and the underwriting pretty much at the same time. So that person definitely has within them, okay, I'm pre-approved for $400,000. However, all I'm doing is buying a house that's $250,000. That's all it means is because you're pre-approved for this doesn't mean you have to do that. You have $100 in your pocket. That doesn't mean you're going to pay $100 for a jug of milk, so you're going to pay what it's worth or what you need.
No, that's absolutely 100% right. People are always concerned that if they're getting a pre-approval that you're going to make them spend it all or use it all. And that's completely the opposite. Like you said, it is super important to have these pre-approvals because, you know as well as I do in this market, looking at a home, by the time you turn around, it's under contract.
Exactly.
So that's why, it's a good analogy with the store. You don't want to go without your money. So that's very important to have your ducks in a row on that. And just because, it's never too soon to get pre-approved. I help buyers that, we don't necessarily, everyone's not ready at the same time. So just because you're getting a pre-approval doesn't mean you're going to be buying in the next month. We call it a mortgage plan. You want to plan. Some people are ready to buy immediately they're getting out of a lease, whatever, but other people are looking 6 months down the road, even next year. And we would rather you go and get a pre-approved now, even if you're going to buy next year, so you know what to do. Maybe your credit's not good enough yet. Maybe the score's not high enough. Maybe you need to save a little bit more money, but we can give you good guidance on what to do and what not to do, because that could make the difference in being ready when the time comes.
Awesome. See, this is what dealing with a professional does. She's answering all the questions that I had to ask way before I can get to them.
I'm sorry. I know there's so much to share in this process, and there's a lot to it, but when you break it down into little pieces, it's very manageable. It's not rocket science. It's just really knowledge, and knowledge is power, and it gives you comfort. Buyers are very and have a lot of anxiety about the process, but the more they know, they have control over their situation, and it's not as daunting, and it seems much more manageable and doable, and like a goal they can achieve and attain.
Exactly. And a lot of people, they get the pre-approval and then they go out and do some stuff. And I kind of want to cover that also, in the sense that just because you have this pre-approval at this time, what are some of the things that can actually derail that pre-approval?
That's a very good note, because it kind of goes along the question of, well, now I'm pre-approved, so how long is this good for? And it also goes along with, am I getting pre-approved too soon? You know, am I doing it now and it's not going to be good in however, 30, 60, 90 days? So once you're pre-approved, that pre-approval is good for as long as your situation stays the same or better, meaning you don't change jobs. If an emergency came up and you, of course, had to change a job for some reason, it's okay as long as you're in the same line of work. You know, if you're an engineer at Lockheed Martin and you're going to be an engineer now at, Disney or somewhere else, that's fine if you're going to change jobs. You always have to let your lender know. But, if you're an engineer and you're like, I want to live the dream of being a painter, and you decide you're going to go and live in Italy and paint, that's not going to work. You can't change jobs in the middle. But you always have to just be in touch with your lender, and the lender, the realtor, the buyer, we're a triangle, always working together and always staying in touch. You can't be scared to tell, somebody you did something. So changing a job is a big deal.
Mhm.
Also, making a large purchase. We rely on that credit report. So that credit report's good for about 90 days. It's, give or take, some lenders it's longer, maybe some less, but around 90 days. So as long as you're not buying any new boats or new cars, large expensive purchases, and changing your credit because it changes your obligations that you pay monthly or your credit score, you're going to be fine. So those are things you don't want to do that will affect your pre-approval, is incurring more debt, because it affects how much you're going to be able to pay in a mortgage payment. So that's a big thing too. I'm trying to think of all the other things that you don't want to do. Basically, and if you think, well, I'm going to just look for a car, and now all of a sudden you've got 50 inquiries on your credit for a car.
Right.
That it's not the end of the world, but it can affect your credit, and it sometimes can affect your score. And the underwriters are going to question whether or not you went out and got a new lease or anything. So you don't, like I said, don't want to get a new lease or anything like that.
So,
And you don't want to spend your down payment. That's the other key. If you've been saving money and you're, we see it in the bank and we're like, you're good to go. And I'm not joking. I did a loan many, many years ago. We did loans in Henderson, Nevada. And I will never forget the day of closing, the wife and husband sat down at the table. And when they asked about wiring the funds, the husband had gone out and gambled them all away. And the loan never closed.
yeah.
So do not spend the down payment, on something
Right.
else. This is common sense and most people know it, but sometimes little things come up, where you are going to have to maybe change a job, but not like I said, not the end of the world. If you're just going, to a different company, that's okay, as long as you're still doing the same type of work.
Okay. So that said, what are some of the things that can actually enhance that approval? So, for example, they were approved for, let's say, 300,000, and they really want to buy a house that's 350 or 325. Let's go 325. What are some of the things that they can do to step it up?
Well, if you're trying to, and that's a good question in this market, because we all know right now prices
Exactly.
are only going up, and it's getting harder. And again, first of all, people have to have a realistic view of what is their maximum mortgage payment. Because if that $325,000 home has a mortgage payment with it that they just can't handle, then maybe they need to change their, their mindset and their goals and what they're going to purchase. But if, a $325,000 house and a $300,000 house can have very similar monthly payments because of insurance and taxes on the property. So if you're purchasing a home that is already owner occupied by somebody, the taxes might be homestead taxes in the state of Florida. That's what we have. But if you're purchasing a home that's investment and it's being rented out, that tax bill might be really high. So when you first purchase a home, you're taking over that current tax bill. So if you're purchasing a home with really high taxes, but you know that you're going to get them homesteaded in the future, maybe your tax bill will go down. You know, maybe that's something that you're okay with if you can afford the higher payment to start, but you know it might come down a little. It's really questionable though with taxes because you never know what they're going to be. I recommend you use a tax estimator with the county of the property you're looking in.
Right.
But other things, newer homes have lower homeowners insurance. Right now, homeowners insurance is a big topic in Florida because it's expensive this year, particularly. The rates all went up this year, and the older the home, I live in one, the older the roof, the higher your homeowner's insurance. So it's really, you know, when you're trying to purchase something that's more, the best thing you can do is strive to have a credit score over 740. 740 will get you the best interest rate and the lower payment. And then also, when you have mortgage insurance on a conventional loan, that mortgage insurance is based on that same credit score. So if you have a 740 or higher credit score, you're going to have the lower rate, the lower mortgage insurance, and in turn, maybe a lower payment, which might get you into that $325,000 house instead of a $300,000 house. So I would say trying to get your credit up to 740 is an ideal situation.
Right. Now, as far as credit cards, you just mentioned credit a while ago. Some people tend to keep their credit cards not necessarily max out, but close to max. What's the optimum level to really keep your credit card so that, you know, your scores look, you know, look excellent?
Definitely. Yeah. So when it comes to credit, the first thing that affects your credit score, the most important thing is payment history. So, you know, not having any late payments is best, of course. You can have some, but that does affect your credit the most. However, like you said, credit utilization is what we call having your credit cards charged up to their high credit limit. And that's the second cause. So we have people where you'll have a long, long list of credit accounts, all no late payments ever, but their credit score is still in the 600s. And it's usually, the culprit is usually credit cards that are charged over 30% of the high credit limit. So you want to try to keep your credit cards to under 30% charged on their high credit. So if you have $1,000 credit card, you'd like to keep that balance under $300 for a better credit score. Awesome. And also on the flip side, just remember, if you have 5 credit cards and they all have $10,000 credit limits, but you haven't used them at all in the last year or two, that's not necessarily good either. Because the longer that credit sits out there and you don't use it, it starts going against you. So you want to use a couple of your credit cards a little bit here and there just to charge some groceries or some gas and then pay them off and kind of keep your credit active, okay, so that you have a better credit score.
Okay. That definitely makes sense. It's a different world and everything goes by your credit. So
I know so many people are like, they're so, you know, they're like, we have no debt. We pay everything in cash. And I get that. I know Dave Ramsey. I mean, I don't know him personally, but I know his program. And I know, you know, having no debt is a good goal. But at the same time, in this world, when you're trying to get a home loan, because we don't all have hundreds of thousands of dollars to pay for a house in cash, you know, we need to utilize credit just a little bit, and using it wisely is the best thing. A couple small credit cards, you know, you don't charge them like crazy. And an auto loan, I'm not a big fan of auto loans myself, but it does help your credit score if you have an auto loan, you know, or an installment loan of some sort and a couple credit cards to show that you pay those on time.
Awesome. So what are the top 3 questions kind of that people come to you with when they are get a loan?
Well, I would say one of the first questions or the main questions is, and a lot of people, we call them kind of like myths of what people think they need to have in order to get financing. And one of them is that they think they have to have perfect credit. So like when I say that it's better to have a credit score of 740 or higher for certain purposes of a lower rate and stuff, that's true, but it doesn't mean you have to have a credit score in the 700. Some people think you need an 800 credit score to get a home loan, but in reality, our minimum credit score is 620. There are lenders that go down to 600 and some down to 580. Things changed a little bit with COVID last year. It was even lower than that, but lenders, you know, it turned into a more risky environment with COVID, with people not working and, you know, people struggling to make some of their payments. So they bumped up the, you know, the minimum credit requirement. So a 620 is a minimum requirement. However, I recommend that everybody get a 640 or higher for financing. And there's a few reasons for that. Number one is USDA, which is a good program that's in more of some of the rural areas, and it's a nationwide program. It's not just in Florida, but it's the only program that's 100% financing if you're not a veteran. So that program requires a 640 credit score. And then FHA, conventional, they go down to 620, but the cost in the interest rate and the discount points to get that rate, so your closing costs are higher, it is not worth, it's almost not worth doing it sometimes because the cost is so high. So really trying to get your score up to a 640. I do have, some files right now, and the difference between a 630 credit score and a 640 credit score and closing cost is almost 2% of the purchase price. So on a $300,000 house, that's $6,000 more just because your credit's not at a 640. So I would do that. So that's a big common myth. So you can, I would say the average credit score for most of our lenders is probably, probably 675, 680. So you don't have to have perfect credit. And then the other big thing that everybody thinks is that they need to have 20% down. And that's a topic in itself. But in general, anytime you do have less than 20% down, you just have to pay some form of mortgage insurance. And it's not mortgage insurance for you to insure the mortgage. It insures the mortgage to the lender. So it's just telling the lender, hey, they don't have a whole 20% to put down, but if they do have any problem paying this mortgage in the future, you're going to be, you're going to get repaid in some form or protected in some form against loss if they, for some reason, fail to meet their obligation to make their payment in the future. So for FHA, you're paying a mortgage insurance premium. For conventional, you're paying private mortgage insurance. The VA charges a funding fee up front. Right. And USDA also charges a funding fee and a monthly mortgage insurance fee. So you can get a loan for as little as 3% down for conventional financing, 3.5% down for FHA. VA, of course, is 100% financing if you're a veteran. And we have a brand new loan application in the industry that just came into effect March 1st. And one of the big changes is on the application, it asks all applicants if they have served in the military, just to make sure no one is getting left out of the VA loan home program because it's so important. I do have a VA lending certification as well. Great. So it's helping the veterans is awesome. It's a great loan. So, and then USDA, I'm sorry.
I said in our market, since a lot of people love to retire to Central Florida, that's definitely, a serious plus.
You know what? We have a lot of veterans that come down here, and by the time they've retired, some of them, they maybe don't have a need for the VA loan home program because they have, they have some money. Mm-hmm. So they think, well, I don't need 100% financing. I have a down payment. But that doesn't matter because I do loans for veterans where they have 20% down or more, but the rates are just still better for a veteran. Mm-hmm. So, we're always trying to put a person into the loan program that's going to best suit their needs with the least amount of payment monthly. Awesome. Or for whatever they need, we're going to do whatever they want us to do.
Exactly.
So, but there's all those loan programs out there that only require a minimum amount of money down. So you don't have to, have 20%. The time that it takes you to save 20% down for a loan, a lot can change in that time. In Central Florida, homes have gone up in 1 year. We've seen appreciation like crazy. Yep. So, and it's just, so the cost of waiting to try to save 20% down, it's just not reality, really. It would take forever, and it's not in your best interest because you don't know what's going to happen in that time. So you just don't need that much money for down payment. But one other thing, if we do talk in the future, you don't just need a down payment. You have to remember that you're also going to be paying closing costs for that loan too. And Right. That's another topic.
Right. We'll discuss that in our next chat. So I'm hoping that we definitely will continue this because I'm pretty sure that I'm going to get a lot of comments about, the process because I'm putting this out on YouTube and in Facebook also. So more than likely there should be, commentary from people asking for more information. That said, Vikki, how do people get a hold of you?
Oh, well, I am very easily found. I'm on Google, but my phone number is 407-729-5200. And I have an email address, and it's Vikki, Vikki, at Geneva, like Geneva, Switzerland, GENEVAF as in Franklin, I as in igloo.com. And I'm at loans by Vikki, Vikki.com. So I'm out there, but people can, text me and call me. I'm local, and I'm pretty responsive. Try to take care of everyone that I can, even if it's busy. I always say, if you call me, just leave me a message. I get a lot of phone calls. So as long as you leave me a message, I'll always call you back.
Awesome. Yeah, and I've definitely been there. And I know last month, for example, we've been trying to do this for a little while, and it's just been so busy. A lot of folks, they really don't know how much competition they have when they go looking for a house. So once again, getting that pre-approval up front, so that one, your realtor is definitely going to take you at that point, because most home sellers today do not want people just coming to look at their house with a wish or a hope or just a window shop. They want to know that whoever they let into their home is coming there with the intent to purchase. So
Absolutely.
this definitely verifies and certifies that you are able to do that. So getting with Vikki up front to get that pre-approval is definitely plus. Now you've seen her, now you've heard her.
I'm sorry.
Definitely not to be sorry about. So once they meet you, your personality and everything, they've seen who you are. They know now what you're about and what you're going to ask them. And also, one of the things that you do, I think, is when someone contacts you, you send them a sheet that tells them everything that they need to know as far
Yeah,
as.
actually, we have a list of what you need. It's really pretty basic, because we're always asking for information regarding your income and your assets and basically your driver's licenses. We just always have to make sure we know who we're talking to. But we have a phone application. It's for your phone. It's a phone app, but you can also use it on your computer. And so when we do, I mean, I'm always happy to take an application by phone, because I'm from old school. I, take hand applications. It takes me about 15 to 20 minutes to talk to people and get their information. But I do realize it's 2021. People want to apply online.
Mhm.
And I do have a link online that people can go to and apply to. And when they use that, or when I share that with them, it actually asks them for their information, and they can upload their information like immediately using their phone.
Awesome.
Yep. So that's super easy to get information that way as well.
Awesome. All right, Vikki, so we are going to cut it here for today for this video. And we look forward to the next segment when we talk about the process, more off the process, like you mentioned, the closings and all that, what happens, underwriting, possibly, the whole nine. Okay.
Yeah,
So
happy to talk about it.
awesome. So once again, I thank you very much for sharing this with us, because we want to make, instead of I dream of Florida homes, that my Florida home is now a reality. Okay. We're trying to help.
I think that's a great idea.
All right, thanks again. I'm Neville Smith with Preferred Real Estate Brokers here in Central Florida, and I look forward to working with you, making that dream a reality.
Thanks, Neville.